Welcome to another episode of StewTube. Bitcoin continues being volatile as hell, both directions, which is fantastic for traders such as ourselves. So I wanted to take a look at my current market opinions, look for some Stuber fib setups, take a look at some of my favorite indicators and trade strategies and so on. So with that, basically to start things off, I'm actually starting on the 5 minute here today, and that's just because I wanted to go over maybe some of you guys were just in my financial summit stream I did very quickly here about 20 minutes ago, but this is the position I took in a financial summit stream yesterday, and it's been playing out absolutely fantastically. I did end up, I think I took 3 short positions during that stream yesterday. One of them was a very small profit. The second one was basically break even, and the third one absolutely took off for me. Basically right after I stopped streaming, I think it was about an hour later, I noticed that holy shit, this thing is running. We were getting a big nuke to the downside. My first entry was actually a couple $100 higher. I think it was up just below 58.3k, and my reasoning for that was basically, we ended up sweeping this market structure. We broke the highs here because the way I was looking at this market structure was basically, lows of this range, we end up going lower. You could even say technically that this was a lower low and then another lower low. So whether you want to consider this your lower high or this your lower high, either way, we broke above that. And even if this structure was to be bullish, it's so often after you get a structure break like that, you see a significant pullback, basically retracing the entire range before continuing on. And that's exactly why I love these Stuber fib setups, looking for the 786, 886 fib pocket, because so often we get that structure break and then we come back down to those levels. So I was saying yesterday that even if this is going to take a bullish turn, I expected us to see down towards that 56.2k level, just because that was my 786 of this current range. And that's exactly what ended up happening. So the thing is, right now, it's obviously a little bit late to get into any new shorts because shorting into support is always dangerous. I know everybody likes to get very bearish as we trade into support, just like people love getting bullish and FOMO as we trade into resistance. That's very natural. It's not what you want to do, but it is a natural instinct. And there's a lot of people who will want to be shorting right now. And yes, although I do expect lower prices, just to understand that for this to be invalidated, we need to break these highs way up here, basically 58.5k. So, I mean, that's a couple $1,000 move to the upside to invalidate a short from this level, unless you wanted to play, more immediate swing levels like shorting here and let's say having your stop above this structure here, just because, on this immediate downtrend, we did technically have these lows and a lower low. This would be the lower high because it's the highest point between the two. That's kind of how I'm looking at market structure on the immediate trend there. But again, just since we are trading into a bigger support level here, just understand that it is a lot more risky to look for shorts at this level. In my opinion, the short was yesterday because we were trading at resistance, right? On the 4 hour, another thing to consider that, we did technically find some support right in the middle of this range, basically. Technically, it is support of this range, right? I don't consider this actual bullish structure because when I really zoom out, the lower lows and lower highs are actually quite a ways away. But as far as the smaller ranges inside the macro ranges, we did have this high, higher high. This would be our lowest point between the two. So that's our higher low on the trend. The fact that we came back to this level and respected it, I mean, this was nice. The fact that we did get some sort of a reaction there, it made sense. We were trading at a support level, right, guys? The thing is, we never got much follow through from that. Like, if this was going to act as a proper swing fail here, I really would have expected us to go a little bit higher. Yes, technically we are setting a double bottom at this level so far. Just understand that the fact is I'm just seeing weakness, right? Because we came down to this level. If I would really want to see a nice violent reaction if we were going to be setting a new higher low or just continuing the uptrend. I would have thought that bounce would have at least broken us, kind of above this structure. Going for that that lower high structure here, at least closing candles above the candle bodies kind of a thing. If this would have closed up here, you know, I could have entertained the idea that if we come down here, it might just be a bullish retest. But the fact that we never did take out that lower high on the immediate trend on the 4 hour, it just shows, it just looks to me like there's room for potential downside yet. I just think that there's still weakness. We also haven't quite reached my range target. And what I mean by that is basically, you know, the 214 fib here, right around 53.6K. That's kind of going to my macro chart here. I'm going to call this macro. The same thing lines up on the weekly chart, the daily chart, the 4 hourly chart, but I like to show it on the 4 hour because it's just very clear, you know, how I labeled out where we had these structure breaks, lower low, that confirms our high, lower low confirms our lower high, lower low confirms our lower high. We still haven't broken this lower low. So technically this is not a confirmed lower high yet. I'm still looking at our lower high as being right around that basically 70K. Unfortunately, yes, that's a far ways to go if we are going to break this structure. And that's why I'd personally like to see us go lower, set some tighter consolidation ranges, and then break that structure on a much smaller, tighter range where you have invalidation levels that are so tight. At that point, I can comfortably start getting bullish again, because we have a nice setup that, hey, at least there's been a structure break going for that bullish theory. Right now, we still don't have that, right? So yeah, basically just seeing weakness, the fact that this time we never even made it up to the Stuber fib pocket on the bear side. We got shut down right around 65K. The 786 would have been around 65.5K. So it actually got shut down $500 shy. So I'm just seeing a little bit of weakness there. So I'm not so sure my range target is even going to hold as support, right? That 214 is basically the opposite 786. So if I'm going to look for support, that's the reason why that's a take profit on my short. If, you know, if I was shorting on a more of a swing trade, right? If I'm entering around the 786, 886, I'd be looking for the 214 as a take profit. And if I pull that opposite fib, basically the current swing to the upside that we had there, the 786 is at around 52.5K, whereas the 214 is at about 53.6K. So there is about $1,000 difference there, but on the 4 hour, it looks very small. But yes, I don't see why at this point, why we wouldn't get down towards that 786. So I really do have a feeling we go down there. And something I was just talking about on my other stream is, you know, although I love 786, 886 fib pockets, and, you know, that's why I always call them the Stuber fibs. The thing is, this one is not actually a legit Stuber fib. It is just a typical 786, 886 fib, right? If we would have taken out this lower high and then pulled all the way back, I would have actually been significantly more bullish, because at least we would have that bullish structure break and then a pullback. So we would have that, you know, there's a chance that we find support and continue the trend, because the structure was to the upside in that case. But we unfortunately don't have that. So this is just a little bit more of a risky play if you are looking to long the market at these levels. I'm personally bearish until proven otherwise. I've been bearish since the start of June, and unfortunately that's just the way it's going to stay for now. I'm still open to the idea of taking scalps long. I'm still open to the idea of bounces happening. I don't think we're going straight down. Markets love to bounce around. I just think that the trend, well, and it's not so much that I think. That's the difference here, you guys. I know a lot of people say, well, I think we're going to break this trend. I think we're going to break all-time highs, whatever. The thing is, with this picture right here that you see, this series of lower highs and lower lows, this is not a bias. This is a fact. This is a chart. This is technical analysis. We have been setting lower lows, which are confirming lower highs. That's all there is to it. Yes, trends do break eventually, and if we break it to the upside, yes, it could very much so get violent, and it could end up blasting through all-time highs and going parabolic at that point. But I personally trade the charts that are there. I don't like to guess what the chart is going to do. That's just personally not how I trade. I will not look at the media. I will not listen to speeches. I will not do any of that kind of stuff that might cloud my judgment when looking at the charts, because I'm human just like anybody else. If I hear something that's extremely bullish in a conference, I have a feeling that it could sway my the way I'm looking at the market. So I actually go out of my way. I know a lot of people try and catch those events because they think they're going to get an edge on the market. I personally never do. I always play it bad. I understand that, you know, there's a chance I misunderstand macroeconomics. To me, it's a lot simpler to draw some colorful lines and trade them rather than to try and understand the entire world economy and understand how fractions of percents are going to affect entire markets and stuff like that. I just think that it's ridiculous to think that it's more simple to pick apart the news and the world economy than just basic structure. And if I showed you this chart, if you didn't, like, here's the thing, guys, just pretend all these big numbers on the side here, these values are not here. Pretend they're not existent, and pretend this is not Bitcoin. It's a random asset that a friend shows you, an asset you know nothing about. You have no personal bias about the fundamentals of it. What would you think about this chart? If you would think it was bearish just by looking at the chart, then this should be no different. And that's a good way to check your bias, is let's just pretend this is something totally different. How does the chart look? If this was not Bitcoin, how would I feel about this? Personally, I see a downtrend. That's all there is to it. Again, I love Bitcoin. I love crypto. I use it every single day. I trade it every single day. The main reason I love it is because it's so volatile, and that goes for both directions. If we're actually traders and we want to be traders and make money that way in this market, we should not be glued to an up-only mentality. That's all there is to it. As actual traders, we should not care which way the market moves. All we should care about is that it's moving. And honestly, that mindset, while everybody's been panicking every time we take these big dumps to the downside, I have never felt more calm in this market. I've never had less FOMO. I'm just playing it for what it is, swing by swing. I'm just very relaxed either way, because I don't have a strong, well, I do have a strong opinion, but I don't need to trade that opinion. Like, if things are looking like they're going to bounce, I can hold off on the short and wait to short after a bounce, kind of a thing. That's why I use Fibonacci's. It keeps everything very structured. On top of that, looking at some of the indicators for which way things are trending, right? In my stream yesterday, when I ended up taking this short, I did mention that I was going to find additional confluence if the MDX ALGO Trendmaster indicator ended up starting to print. I was actually looking at the 1 minute. I said if it started getting sell signals trending to the downside, that it was going to confirm my bias, basically. And we ended up getting basically, notice here, up here, while we were trading sideways, we had this series of higher buy signals. We also had higher sell signals. Look what happened when all of a sudden we got a lower buy signal and a lower sell signal and then another lower sell signal, right? So that just added confidence in my eyes that, hey, yeah, the indicators are now, as a second opinion, showing that they think that the trend is shifting to the downside. So it's not that I take every individual signal when I use these indicators, but coming up with ways like that, just using indicators, and this goes for every indicator pretty much, is I more so use them to notice which way things are trending, and that will help basically confirm my bias. And obviously things are wrong sometimes, and not every trade setup is going to work out. But that's one way that I love looking for confirmations when I'm trading. And, you know, same thing right now. The one thing is we did take this big dump to the downside. We're trading inside a bullish Stuber fib pocket. So there is that to consider. But, you know, so far, these sell signals are trending to the downside again. So are these buy signals. So we're going to have to see what happens. The fact is, since we basically got down to my, actually on the 5 minute, look how beautiful that is. As soon as we got this lower sell signal, I mean, you can see that we ended up trending to the downside again a little bit. Yeah, just a nice series of lower sell signals, lower buy signals so far, right? Eventually that's going to change. But yeah, basically when I entered my trade up here, I was taking profits along the way, especially once we ended up hitting my 786, 886. I ended up closing more of my position. I only have about 40% of this short still running. And that's because, you know, even if I expect lower prices and I am extremely bearish on kind of the midterm for Bitcoin, I always want to trade in a way that I'm paying myself on the way, so that even if I'm wrong, I made money on this position. And I'm a big fan of trading the range first and looking for that breakout later. So I closed 60% of my position within this range, being that, you know, this is the size of Fibonacci I have pulled. And since this was the target, you know, playing the range for what it is. We're back at range support, getting near support levels here. So I'm looking at taking profits. And you can see that even if we do continue to the downside, you can see there's a very obvious reaction in that fib pocket. Look how many candle bodies are closing there. This is only the 5-minute chart, but you can see there's just obvious interest at that level. Whether or not it ends up holding, it's just very clear, right? And that's why I love using those levels so much. Always keep the magic pens around. That's absolutely right. Yeah, so as it stands right now, I mean, that's my opinion when looking at the 5-minute. I think it looks weak, but technically we are at support, and support is support until it's broken. So I think it's risky to get into a short right now, even though I think that the price is going lower. But another thing a person could watch for would be these lower high signals. Quite often when we get these, one strategy I love to do is pulling Fibonacci's off of these auto charting signals, right? Here you can see would have been a perfect example. Get a lower high signal, start pulling a bearish fib, and notice that eventually we come up and we test that 786, 886 damn near perfectly here, and that would have been a beautiful entry as well, right? Just using the signals. And actually the next one might have happened too. Now this is a lagging indicator, right? These lower high, lower low signals, etc. They are a lagging indicator, so it's hard to say if this would have been printed in time. But again, right up to that fib pocket and then rejection. So that's just another great way of just looking for confluence where to pull Fibonacci's from and stuff like that. This one obviously didn't happen. It's not always going to get up to those levels, but that's a position that I would have been interested in looking for if I wasn't already in a position. Now, for example, hey, we still have lower lows and lower highs forming on the auto charting tools. So if I was, you know, looking for a new position, I'd at least be looking for some sort of a bounce, something like that. Not saying we're necessarily going to get it, but that's more so what I would be looking at, some sort of a bounce before getting into a trade. And obviously there's a chance that it just blasts right through, right? These trends do break eventually, but you can see how nice that these have been calling the trend, basically. Basically this whole downtrend here, all these lower highs, just absolutely beautiful. If you were shorting on the way down, using those as invalidations, I mean, you would have played this whole downtrend just fine, right? So I love using that. I love using the auto charting tools and Fibonacci's together because it just helps you pinpoint those pivot points, those reversals, and then looking for those structured pullbacks, right? One of my favorite things to do, and honestly, it's just such a life hack. Again, it's not going to work every time. There's absolutely the chance that, hey, we get into a short here and just blast past that lower high. As soon as that's invalidated, I'm not really interested at that point. If I'm pulling these off of the auto charting tool signals, I often won't actually use the 115 as invalidation. I'll actually keep it basically just above that pivot point, because if that breaks, then that's a break in structure, and even where the indicator figured that it was a structure point. So able to cut the losses a little bit quicker on those as well. But just one of my favorite strategies that I like to use there. And again, just a life hack, right? Because at that point, it's a lot harder to miss those signals than it is to miss or misanalyze a structure break of some kind, right? So that really helps draw your eye to it. Something I wanted to look at was TON. Last week, I had actually taken a short here on stream. I ended up closing this a couple days ago. Honestly, I thought I was going to regret it, but something that's interesting is it looks to me like TON is trying to reverse on the 5-minute. Just that we kept setting, low lower low, lower high. We ended up breaking that level. So even if we pulled back now, we technically might have some bullish structure there. Obviously, there's a lot more to that because the founder of Ton and Telegram, obviously, we all know he got arrested and so on. But if anything bullish happens there, let's say he makes bail, he gets out, something like that, who knows, there might be an extraordinary recovery, right? A bunch of FOMO and hype comes back in on something like that. But as it stands right now, it is nice and volatile. It's been on my radar recently, but yeah, I did end up closing the rest of that position. Maybe I should have held on to a small chunk of it, but honestly, it was such a nice trade. It ended up being over 300% because this was at 20x leverage. And this was actually taken with that strategy I was just talking about, right? The lower highs, the auto charting tools. If I bring that up, yeah, you can see that it was pulled from this lower high signal down to our lower low. We did end up setting a higher high, but basically it still got rejected, right? So yeah, I actually almost got stopped out on that, but then it ended up reversing and it played out beautifully. So again, just a great example of how it's such a simple strategy. Just pulled a Fibonacci off that signal and then it was just Nuketown. And again, the lower high, lower low signals just pointing out an absolutely beautiful trend there. The reason why I closed most of this is just it looked like we were getting to a macro support level. If I bring up the daily chart, actually I want to delete that. Basically from this level, we basically came back down to that level. I was like, you know, that's a fairly important support level. Yes, if the floor gives way, I mean, that could be a very aggressive dump to the downside. So if Bitcoin, let's say, hits panic mode and loses support, if something escalates with the court case here, anything like that, it could get very violent to the downside. But as it stands right now, again, support is support until it's broken. And yeah, I did end up closing that position. So Bitcoin on the 5 minutes, still just kind of chopping around sideways in my support pocket. I don't know if anything too crazy is going to happen in the next little bit. It just might need some time to cool off. And that's where we're going to see if we actually get some sort of a correction to the upside after hitting my support level, or is the correction going to be time-based, where rather than correcting to the upside, we just kind of trade sideways, form a bit of a bear flag, you know, bear pull, flag, pull down. Absolutely a possibility something like that happens, right? Again, it's just a little risky shorting into support, so just be aware of that. If that's something if you're feeling FOMO on something like that, I'm always a big fan of looking for pullbacks just because invalidation levels are tighter and stuff like that. You took that short as well at 58.2, but too tight of a stop loss and got stopped out. And yeah, that happened to me the first time that I took that one yesterday. Like I said, I took that one trade, which would have been absolutely perfect. Updated stop loss too soon, which I should have known better because it was very possible we just would have hit this 786 from the lower high, right? But I overlooked that. And I ended up taking that new position. So yes, it's unfortunate it wasn't as good as it could have been, but it was still pretty damn good. So not going to complain too much about that. But I totally understand how you would have got stopped out. And that's a big thing that a lot of traders do, and myself included, is, you know, that's something that happens quite often with traders, is that, you know, updating a stop loss too soon. And if I'm really in full-on scalp mode, I mean, that's just an assumed risk, basically, because, you know, I'm very quick to start taking profits and update stop loss just so that, you know, just taking whatever profits I can and not willing to take a loss. That one yesterday, I probably should have left it go, but, you know, shoulda, woulda, coulda, didn't, and then took the new trade instead, so whatever. It is what it is. Cause, good to see you here. We missed you in the last few streams. I also saw you in the one that I just did a few minutes ago elsewhere, so thank you for that. Not working today? Beautiful. Working's overrated. Let's see what the 4-hour signals are saying. So something with the 4-hour, and I had pointed this out yesterday. We still, we do technically have higher trending sell signals and lower trending buy signals. So kind of mixed signals from the Trendmaster indicator there. We do have trending Ps, so these would be reversal pivots. You can see that this was a bearish one because it was above the price, as was this one. So those are trending to the downside right now, and as well going with this sell signal. So there is some definite resistance there, right? No matter how you look at it, you know, whether it's with the indicators as a second opinion, it's just the market structure in general, just no matter how you look at it, Bitcoin has a ton of work to do. It just does not look good to me. I mean, the weekly looks even worse in my opinion. Every time I look at the weekly chart, I get more bearish. I'm sorry guys, it's just a fact. You know, this doesn't look good to me. I had pointed this out earlier this week. Actually, it was during last week's candle. I had pointed out that we were getting rejected at this yellow box here. So my yellow box here, basically to break it down, I'm going to remove the wicks just to really clean things up here. I got bearish on the price at this level, basically. A lot of you guys were here with me. Actually, it was right around here because it was June 13th. Remember it very clearly. But basically I was looking at this as, hey, we actually on the weekly, as far as candle bodies, we lost this structure. We lost that higher low. Yes, it's micro analyzed, but I mean, we hadn't seen that since even this wasn't it actually. We have not seen that on this trend. We have never lost a higher low until right here on this entire trend. I know a lot of people would argue, oh, here we did. No, because the way I'm looking at it is we never confirmed this as a higher low because we never set another higher high, right? So we never set another higher high until, well, even that's basically double top. Yeah, no, we never lost higher low structure as far as candle bodies on the weekly until, well, basically the end of March. And then I noticed that, hey, we pulled back. Guess where we pulled back to? Wicks or just candle bodies. We basically filled that 786, 886 fib pocket and got rejected. And I said, you know, especially with this RSI divergence lining up, very overextended down to, you know, regular territory, we're basically approaching double top territory with significantly less strength on the relative strength index, right? So there was no reason for me to be bullish there. And I had mentioned that basically if this was any other chart, if this was a 5-minute chart, a 1-minute chart, a 1 hour, a 4 hour, I would be shorting the shit out of this. And on a weekly chart, I cannot ignore that. That is a very big reversal signal that I trade on every time frame. And not to say that this market cycle is over. I want to be clear about this, you guys. I think that there is higher prices to come this bull market. So I don't want to sound too bearish. The problem is, and what a lot of people are overlooking, is we could have let me rephrase that. We could have a bear market sized move as a final flush before, you know, big players fill their bags and they're able to buy the dip that nobody can because nobody actually waited for the proper dip. They thought, you know, so many people thought that this was the dip. So they're buying every single little dip. And if we go much lower, a lot of people are not going to have any money left, but the very patient, smart money will. And if we do get down to those levels, I do think it would take a black swan event to get there. I want to be clear about this. I'm not saying we're going down to 28 or 22K, but the possibility is there. I personally think we get a strong reaction bounce between 45 and 40,000 US dollars because this is the only real trading action we had other than way back here. You know, this doji candle that we ended up finding support at, yeah, it's great. And actually I should turn the wicks back on for this. I made my point about without the wicks. You can see that we ended up finding support at this doji candle. The thing is, that's not a lot of market structure, right? That was a pause on the uptrend, but it wasn't a ton of structure. Whereas back here, we actually traded sideways in a range for about 2 months. So there's some actual structure there. So I'd expect a much better bounce from that level. The big concern I have is that, you know, we still, don't get me wrong, there would be so much FOMO coming in. Everyone would be screaming for all-time highs as we came up, and we could just be setting another Stuber fib type of setup, something like that, and just setting another lower high. Absolutely possible. But there's the chance that, if we don't find support at this 40K, and again, I think we will at least get some sort of a very strong reaction rally if we end up seeing that level. The thing is, if we don't find support there, if we close a candle body below that 40K level, we had no trading, basically no consolidation on this rip to the upside. The next support really is down around that 786, which runs right through the middle of this bigger range that we had for several months. That is the next level of support if we drop this level. Again, not saying we have to, but just understand, if we lose this support, something happens, we get a black swan event, whatever happens there, unnecessary panic, anything, all that matters at the end of the day is supply and demand. And if we lose that support level, there's not much else here that would provide us with support until we get down to this range. And, that range basically runs from, let's call it 31,000 down to 25,000. But at that point, that's so close to my macro Stuber fibs, I'd be more looking at that 28 to 22K. But, if we start losing this support around 40K, I am going to be setting a bunch of limit orders between 30 and 20K basically, because if we do get there, and this is where my attitude changes, I would get so bullish, because I think that would be such a massive flush. And I think big players, just like they do on smaller time frames, I think they would springboard the shit out of that level. And I don't think that people are going to have the opportunity they think, where they're going to just say, oh, I'll have weeks to accumulate at that level. I think if this happens, it will be very short-lived and very violent V-shaped recovery. All just theories at this point. It's just something. The reason I like to look way forward like this, I'm obviously not trading the weekly chart with 69x leverage and stuff like that, but I like to zoom out just so that if these bigger moves happen, right? I'm so used to trading the 5-minute and the 1-minute and stuff like that. It's very easy to start microanalyzing everything, and it would be very easy to start panicking if we get a weekly type of move, right? So that's why I like to zoom out a little bit and just understand that, yeah, if I get into a running position, what's going to happen? Or if I'm bullish, but all of a sudden we drop that 40K and we just absolutely nuke, rather than thinking, what the hell is going on? At least at this point, I understand that it's just because we have no trading action there, right? It makes sense. We drop from one support level to the next. If you were falling through the floor of an apartment building or a condo or whatever, you're going to hit the next floor, and probably some sort of slowdown will happen. So, that's just where we look at this level, that, if we get there, yes, we'll probably get some sort of a bounce. Yes, as soon as we bounce a percent or two, everyone will be saying the bottom's in. Everyone will really FOMO in as we start trading into resistance. And that would just be recipe to get shut down one more time. But does it have to happen? Obviously not. All of this is just theories and just things to look forward to, just to keep a level head if they do start happening, right? We did print this lower low signal here. Yeah, still really just struggling in that Fibonacci pocket. As far as if a person was bullish, already would have had a decent entry, because as I enter on Stuber Fibs, I always enter the 786, 886, and the full retrace, basically double bottom. I front run them a little bit. So if a person had got into all three entries, especially because I always ladder in heavier as I get closer to my invalidation, usually ends up just a little bit lower than the 886 if it was to happen. So still not a bad entry, because we're still at that Stuber Fib. I'm just personally not interested in taking longs right now. You guys know I'm very openly bearish recently. I know some people are sick of hearing my bearish theories, but it is what it is. The indicators showing these lower highs, lower lows, the 4-hour, just again, sell signal on the 4-hour P's, these pivots trending to the downside. And as well, I think I already touched on that. I can't remember if that was this stream or the one I just did elsewhere, but we're just seeing weakness, right? We never just got this liquidity grab and then springboard to the upside and break some of this structure. We never got any of that, right? We just got a little bounce. We got shut down very quickly. And now we're basically trading right around this support level again. So yes, support is support until it's broken. but I'm just seeing weakness, and that's how I've felt about Bitcoin for months at this point. A big one for me, honestly, the one of the biggest things for me is just that we've set so many lower lows now, and like I said, we never even retested the 786 on this macro time frame. We were about $500 shy. Every other reversal here, where I have these red boxes, these were all 886s. These red boxes are 786, 886 fib pockets. And each of these swings after a structure break made it all the way up to the 886. This swing that we currently had never even made it to the 786. So the bears were quicker to pull the trigger. Everyone was getting FOMO extra early on this bounce. Not sure why, but you know, it was just recipe for. I think we were seeing something like 70% market long again as we were trading into resistance, and you see that so often where everyone starts FOMOing into resistance. It's natural instinct, but it's unfortunately what you don't want to do. Typically, you want to buy support, sell resistance, but I know emotionally everybody likes to do the different or the opposite. Sorry, Smallio. You have experience in what after a few gin and tonics? I haven't been keeping up with the chat. My bad, guys. Yeah, what's the 1 minute looking like? I want to take a look at the 1 minute. Oh, falling through floors onto the next floor. Yeah, been there. Maybe a table or two. The 1 minute's starting to set some higher lows. That's good to see. But again, we're just kind of trading sideways. I don't know, just weakness all around. One thing I really like to do with these indicators, like I was talking about using the auto charting tools and pulling Fibonacci's from them. When I do that, I typically like to pull from the 5 minute. So just like I have here. And then when I'm actually taking my entries, I like to zoom into the 1 minute. So if I'm not positive I want to take those entries, or I just want to, you know, get extra confirmations, then I'll look for the 1 minute to start showing weakness at those levels, right? So if we get something like this where we're setting higher highs and higher lows, and all of a sudden we drop it, something like that, then I'm going to be very likely to start taking that short, right? Because it's what I'm looking at. I'm analyzing it on the 5 minute, but then as soon as a smaller time frame starts showing that weakness, just looking for that early structure break, basically, is how I like to do that. As it stands right now, yeah, I don't know. We have this higher low printed after this lower high. So yeah, maybe we do end up getting pushed to those higher targets. The fact that we're not really getting shut. I mean, technically we're right at this lower high resistance. It just, we're not seeing a ton of weakness yet. I'd feel better about shorting this as a double top if we never had this higher low signal, but since we do, it's just something to be cautious of, right? I mean, there is the potential for this bearish Stuber. It's just risky, right? Because again, on the bigger swing of things, yes, on the 1 minute, sure, there's this bearish Stuber fib that might play out. But the thing is that this bigger fib pocket on the 5 and the 15 minute, we are technically right in support. So there's just some added risk there, right? I am curious to see if this lower high signal holds, but I'm not going to be adding an additional you know, you could take it a little bigger if we're not going off these signals. It'd be more so going off, here's a low, lower low, highest point between the two. Even if we just call it this point here, whatever, as far as our current range goes. Could look for more of a fib pull like this if really itching to get into a short. We are technically right in that 786, 886 fib pocket, but again, I don't know. I just really feel like yesterday was the time to get into a short while we were trading at resistance. I see weakness on the 4-hour, but it's obviously just risky. Actually, one thing I wanted to touch on, when I look at this 4-hour, it just caught my eye, and I know I did mean to talk about it. Something that I've noticed lately is, when markets are about to reverse or when markets are about to find support, typically what I like to see is the market slowly approaching support, and in a controlled fashion, right? You want to see basically a big shot up followed by a slow grind to the downside. And what we have right now is every time we get these structure breaks, we get that pullback to the Stuber fibs, and then we see a more aggressive sell-off, right? These sell-offs are getting more aggressive. When you compare this one to this one to this one, they are getting increasingly powerful. And the thing is, we haven't actually had a crazy breakout of this macro range. We have had very healthy structure breaks followed by pullbacks. So if one of these times that market structure gives and our sell-offs are getting more and stronger and stronger each time, if that floor gives eventually, we might see a very, very large move come into the market. I think that's something that a lot of people are overlooking right now, is that not just the levels we're approaching and the levels that we're hitting and respecting, it's also how we're hitting those levels, how we're respecting them. And yeah, just understand that these sell-offs have been getting more and more aggressive. Even right now, just looking at this immediate downtrend here, notice that it seemed like, hey, we found some support. We tried to find some sort of an uptrend, but then we just ended up curling, and it really looks like we're just kind of curling down off a cliff. Obviously, we're going to have support fairly soon, hopefully, for the bulls. I personally hope not. But yeah, there's still quite a decent sized move to the downside if this floor does drop here. One thing that has me second guessing this, one thing with the indicators is the liquidations levels. Notice that there is more liquidations to the upside at this point, and it makes sense because everybody starts shorting into support, right? And being that we are near a support level, people are starting to short heavily into this. And notice we're starting to see those high leverage, the 50x and the 100x liquidation levels forming to the upside, a lot more so than the downside. There still is some to the downside, and I think that if we do go to the downside, that people will start trying to long this dip once again, because so many people are convinced the bottom is in, without anything really backing that up at this point. But if we get down to these levels and people start thinking that this is the bottom, this is the dip, I'm buying in, then all of a sudden we get a whole bunch of liquidation levels opening up to the downside. But as it stands right now, it just kind of looks to me like there's a lot of late shorters in the market, and we're starting to see those liquidations to the upside. And notice that those liquidations line up right to the 786, 886 basically. Well, the 786, a little more up into the box. But yeah, they're basically from here up towards 65K again. If we are to grab that liquidity to the downside here, just notice where it lines up. If I pull that Fibonacci once more, notice that the last little bit of liquidations from the long side of things is right at the 786, like bang on. So, it makes sense that we could even just go down there, grab that last little bit of liquidity, end up blasting to the upside, grabbing all of this, everyone FOMOs into resistance again, and then we get that big continuation. It's all just theories at this point, but it's something to watch for, right? Basically, with using this liquidations indicator, I don't really enter trades based on it, but I more so just use it as a guideline of, does it make sense for this to happen? Does it make sense for us to go to the upside right now? Sure, we're at support, and there's a bunch of short liquidations with high leverage up above us. So something to consider. I actually want to change the settings on this, and rather than the levels, I want to bring up the bands. It'll show us where our high leverage liquidations are on the 4-hour here. Wait for this to load. Having a hard time loading. Looking like a dumperoo incoming. Oh yeah, the old sink in the drain. Still so confused about those liquidations. If we have 74% long short ratio, how can there be more short liquidation volume than there is long liquidation volume? Anyone here knows. My only theory about that is that here, let me go back to that. Here, first of all, that is right up around 60K again, would be where this high leverage liquidation would be on the bands. Go back to the levels. Why, if the market is so long, why is there so many liquidation levels? I feel like maybe it has something to do with maybe and I could be wrong on this. I want to be very clear that, I'm not a fundamental guys and I don't dive too deeply into things. I just look at it for what it is very simply. My theory on this is that, most of retail is long, as in the number of traders are mostly long. Like most of retail is long, but a lot of the bigger orders are on the short side of things. Or maybe a lot of the longs are lower leverage or something like that. Because I do only have the 50x and 100x liquidation levels up here just because they're more likely to happen fast. That's just my theory. I don't know if that's accurate or not. Maybe someone else does have a better explanation. I really like to use it, actually. I'm going to turn it back to the bands. I like that. It's almost like a bit of a moving average, but it's I find it as a better resistance level because that's where that high leverage liquidation is. So it makes sense that, hey, if we break structure, there's still that, the fake out where the liquidation levels are, where, hey, we could break above this, let's say the candle bodies here. We could break above this resistance here, but then notice that we could just be going to grab some of those high leverage liquidations and then carrying on to the downside. So I like using that more so than moving averages and stuff like that. Yeah, very neat, and I like the way it looks. But yeah, it almost works like a EMA ribbon kind of a thing. Not quite on, obviously it's factored in on different factors, but just the way it looks like support or resistance, and just where the market maker may push the price to grab some of that liquidity, basically. TON actually looks better than Bitcoin right now. Maybe it'll be one of those things that quite often there will be coins that will temporarily do the exact opposite as Bitcoin. Maybe that's what TON's gonna do. I know XRP does that quite a bit, actually. Not just this cycle, but last cycle I remember it doing it as well. Still some warnings here. There's potential that this already lost this uptrend on the 5-minute. So there is the potential that this trend is going to reverse here very soon, but I don't know. As compared to Bitcoin, at least there's some sort of a rounding bottom happening, and we're starting to see with even the auto charting tools, we switched from a bunch of lower highs and lower lows, and now all of a sudden we're starting to see higher highs and higher lows come into play. So TON might actually see some relief. Yeah, I'm not sure. That could very well be as well, right? When we're looking at retail positions and what the long short ratio is, maybe the MDX ALGO indicator also shows, it averages in all the orders. So the big players as well, not just retail. That's absolutely possible too. I don't know for sure. The end of Viking style stream dump, but Stuber stream. Yeah, that's kind of funny. Whenever Viking ends his streams, it seems like the price just dumps. Or lately, anyways. Yeah, I actually, as far as Bitcoin goes, I like this bearish fib pull. Not this one. I like this one here because technically, even just what's on the screen right now, you can see this wasn't really a lower low. That was more of a double bottom, if anything. Maybe very slightly. I don't know if I'm going to consider that though. But I'd be more so looking at this as basically our low, lower low, lower high. So notice the fib is pulled from here down to here. And I would like to see basically something like this. If we break above this structure back here, because it's more so looking at it on the 5 minute, and this whole range, if we break above this level, then I'm going to be exiting the rest of my short, because at that point I think we've broken some serious structure, and that's right around 57.3k. As long as we can stay below that, I'm going to remain bearish for the immediate term. Okay, so that is correct. The long short ratio is retail, but the indicators takes all data. So that would make sense why the liquidations are to the upside, even if retail is mostly long. We have a market maker connection, only changes, or he's 9-1 net short, only changes if we gain the weekly at 61.5. Said if 54.7 isn't a hold, the liquidity boys are looking for new lows, but buying up 47.2 as a final wick and front run any demand lower. Also, if we reclaim 57, they are looking to wick out a 70 mil short, which is around 58.5. Yeah, 58.5 would be, yeah, basically right where we've topped out currently, right? Basically right where we found resistance before I took my short there. That would be that high there. So yeah, I totally agree. You know, if we do go back up there, I feel like that would be a beautiful position to start looking for shorts again. $57.2 as far as a big buy level. Honestly, I would have expected it just slightly lower, but yeah, to front run some of these wicks back here and stuff like that, yeah. I have a feeling that support isn't going to hold. I think, and again, happy to be wrong on this, I am going to most likely flip short-term bullish when we do approach that, you know, basically anywhere from 48. Well, actually, no, if we sweep these lows, I don't know. I personally think if we drop towards that 45, 40K, I will be short-term bullish, but I think it's very likely that we set one more lower high, one more serious relief rally, because after that size of a relief rally, if we got it, there's no way that most people aren't getting suckered into a FOMO rally. You know, that would be such a big bounce. I mean, all Bitcoin has to do is bounce of, you know, 1%, and Twitter is all about, oh, the bottom is in. If we get a bounce, something like that, let's just say something like a 50% jump to the upside there, people would have so much FOMO and be really trying to buy right into resistance, and I could see that getting that one last bigger rejection, but I think it would take a black swan event for that kind of a thing, where we see lower prices than that. It's just something to be aware of, because as I mentioned earlier, just below these levels, if we don't hold that range as support, or we get a bounce and then come back to it and then lose it, there was just no trading action here on the way up. So that is a big gap. You know, we lose this support, we're going down very quickly, in my opinion. Unless it's just a liquidity grab, right? If we just wick below this box, get right back above it, then yeah, absolutely, that would look bullish as hell to me. But it's more so if we end up losing that, closing below, flip it into resistance, I think we're going much lower at that point. But there's a lot of what ifs that have to play out for that to happen. Not leverage trading the weekly, but just open to some different theories, right? Yeah, I'm curious to see if we're going to set another lower low. Just curious. I'm just going to map out. I know I had this diagonal support last time. You know, maybe we just slowly grind to the downside and tap where that diagonal ends up meeting up with that support. Or, you know, maybe it ends up hitting it much higher, somewhere like right here, very quickly, where we just kind of retest that 48K. You know, maybe that's a thing. We're going to have to see what the price does. Because at the end of the day, it does not give a shit about my opinion. Does not care about my feelings. Bring the Trendmaster back up. Trying to, you know, we're back above this sell trend here, but still have a series of lower buys and lower sells on the 5-minute chart here. So, I mean, we could get rejected anytime. Even if we climb to the upside, you know, they're still trending downward sell signals. So to get rejected at the 786, 886 around 56.4 all the way up towards 56.6, I think absolutely that would make a lot of sense on the very immediate term, right? I'm not going to be here much longer. I did want to look at a couple things for people here. First of all, I wanted to look at helium. There was a few things I wanted to mention on this. Something to consider here is, for one, I really like that it had this nice, you know, it got very tight consolidating for a very long time there. This is a daily chart. And as soon as we ended up basically breaking above this range here, boom, straight parabolic move to the upside. Unfortunately, since we did lose that trend here, I mean, if the bull market's going to continue right away, then yes, I think this is in a very good place. But the fact that we have this little bearish structure break here, yeah, you know, it's getting a nice rally. It is staircasing higher. That is great. But just understand, if you end up seeing weakness coming into the market, it could be because we're trading up to that 786, 886 pulled on this immediate swing here. But like I said, if we're going to go bull market on, and Bitcoin's going to do well, and Ethereum's going to do well, honestly, maybe even on its own. That's the thing. If this ended up setting new highs, or, you know, we just don't lose any higher lows on this immediate trend here, then, you know, it is what it is until that structure breaks. So that does look very nice. Another thing catching my eye, I'm pretty sure I see a big Stuber fib here. You know, when we ended up getting that big pump to the upside, where did we come back to? Yeah, you can eyeball them. The thing with that is, technically we're getting right to my long target, right? If I'm looking at a typical Stuber fib on the daily there, entering around the 786, I mean, we're very close to that 214 fib. What did that end up moving? Even front running the 786 very slightly to where we are now, 150% move to the upside. So absolutely beautiful. Yeah, that's not such a bad looking chart yet. Just understand that, you know, some targets have been reached and the risk is just going up a little bit now as it climbs. But yeah, as long as it's staircasing higher, I mean, that looks juicy. Actually, I can see that even where we first bottomed out here, that just looks like another Stuber fib. If I go from basically where it started up to all-time highs. Ooh, no, we actually basically went right back down to double bottom territory there. So either way, with this more immediate trend here, yeah, you know, we got a beautiful bounce off the 786. What's the 4-hour? Looks like it's breaking out higher. You know, again, staircasing higher. We actually just ended up breaking this high of this range back here, and then we technically did get even another slightly higher high. We did get the candle bodies closing above these bodies, or the wicks ended up going a little higher than those wicks. So yeah, you know, this is still trying to staircase higher, so it doesn't look so bad yet. It's more so that if all of a sudden we end up losing some of this structure, that, you know, things could get fairly bad. And depending what the overall market sentiment is at that time, it could end up nuking, right? But we're going to have to see. DYDX I wanted to look at as well on the 4-hour on MEXC. I do like that it's reclaimed some support. Yeah, what do we all have going off here? I'm just going to map out a few things. You know, this wick back here, found a beautiful double bottom there. We did end up getting closes below that support, but we very quickly got right back above it. So even if this was a bearish signal and we are going to go lower, understand that we could get a bounce back up near the top of the range, right? So if this was a typical Stuber fib setup I was looking to short, I'd be more so looking for something like this, right? Because we had that structure break, then I'm looking for that Fibonacci pullback. If you're looking at this in a bullish perspective, yeah, you know, we reclaimed this level. That's good to see. What can I all find here? Yeah, you know, we're reclaiming that support. Struggling with this level. I don't like that we are struggling with this little bit of, basically this is where we found some resistance that pushed us through our structure here, so where it actually made us set our lower low here. And the fact that we are struggling with this again a little bit, I mean, it's a bit of a warning sign, but again, the fact that we just broke structure, we reclaimed it, I think it's absolutely possible that it gets a very nice bounce. If we are going to target back to the top of that range, I mean, that could be a nice 40% move to the upside. Want to zoom out a little bit, see if there's any random trend lines I can look for. Gonna try and find some trend lines that, you know, have like 3 exact touch points, for example. That's actually something I like right here as well. Even though it is still trending to the downside, it is respecting this old resistance as new support. And you know, something that I like about this trend line is it does meet my criteria of having 3 exact touch points before breaking out. Since it is so steep to the downside, it makes sense that we are just running along it to the downside. But that fact that we're getting near that horizontal support as well as that diagonal support, that could be a nice buy level. The fact that we had, you know, 1 touch point, 2 touch points, we did have this little very small range here. I'm going to call that 3 touch points. So 3 valid touch points before breaking out and now respecting this resistance as support. So again, even though it's still trending to the downside, it is at least still holding this line. And the fact that meeting up with horizontal level, it's starting to try and, you know, regain some levels and that sort of thing. That could be finding nice support now. Even if it goes a little bit lower, I think it's only a matter of time until this gets a very some sort of relief, right? I think this all depends, again, on Bitcoin. Obviously, if Bitcoin just absolutely nukes, I think a lot of altcoins are going to nuke as well. But, you know, as far as this chart looks right now, not so bad. And especially the fact, you know, regaining this level, a nice tight invalidation if you wanted to, you know, just keep your stop loss below the local lows kind of a thing. that is a nice risk reward play, right? The potential move to the upside versus the, loss of our local lows there. What do we got here actually? Let's say you're looking at something like that. Yeah, 3.5 to 1 risk reward kind of a thing. If we are to get back to the top of that range, obviously. Hitting that 5-minute sell resistance for Bitcoin. See if it can blast through that. If we all of a sudden get a higher buy signal on the 5-minute, I would actually consider taking a little more profits as well, just because this is something I've been talking about a lot recently. Is a lot of people only use indicators to help them find more entries, but understand there's other ways. Honestly, I use indicators mostly for risk management, second opinion, taking profits, that sort of thing. So if I'm in a position, I'm in a beautiful running short position right now, and notice that the sell signals and buy signals are trending to the downside. If all of a sudden that reverses and they start trending to the upside, we get a higher sell, a higher buy signal. That's just a good warning to me that, the indicator's warning me that things may be reversing here. So even if I'm not going to close my entire position, I would consider nibbling a little profits off of it again, just to make sure I pay myself a little more. And there's a warning there, because when I enter positions personally, as more of a scalper myself, when I enter a position, I'm basically looking for reasons to get out of it. I'm looking for reasons, and not my whole position. I always like to let some run with a break-even stop. But as far as downsizing my risk, starting to pay myself, I like doing that very quickly. And I start looking for reasons as soon as I'm in a position. And I know this is something that you really have to train yourself with, because honestly, taking profits is probably the hardest thing you can do with trading. Getting into profitable positions, not very hard at all, actually. But taking that, hitting that take profit button before just getting stopped out at break even all the time, and not outweighing your losses, kind of a thing. It's hard to do. It's hard to get in that habit. That's why I love using Fibonacci's. It's very structured. Same with looking at indicators, right? As soon as they change that trend, it's just a warning. Hey, start backing off a little bit, basically, right? And that's the thing, right, Zeus? With your... that was you shared that chart there, hey? Yeah, that's the thing. Like, if structure breaks, if we get some sort of a crazy bigger pennant formation that breaks, structure breaks, we break a lower high, anything like that, I'm very happy to switch my opinion. I would love to be a moon boy again. I just can't bring myself to do it until I see something that catches my eye like that. Appreciate you, Stu. Aw. I appreciate all you guys too. I'm only here because you guys are here. And since you keep watching me, I'm going to keep doing this. So I do appreciate having you guys here with me live. And honestly, I love hearing other people's opinions. It's so much nicer being able to trade these markets with a couple other opinions, because, even if I don't agree with something that goes against my opinion or whatever, it's always good to take a step back. I'm not one of those people like those crypto Twitter people who need an echo chamber, right? I don't need people to validate my theories. I don't need anybody to tell me, Stu, you're very right about being bearish. I really don't care. The fact that I've been bearish for quite a while here, I didn't care that people disagreed with me. All that I care about is it changed the direction I started trading the market, and it's been profitable. So that's all I really care about. I don't care who agrees with me. But I absolutely love having you guys here. And if you don't agree with me, I like considering the other options, right? I'm not married to either direction. Right now, I've just been having a hard time, had a hard time swinging both ways lately. Any tips on not leaving your winning trades too early? My biggest problem at the moment, I think. Um, Everyone has their own thing that works for them, right? My thing is, whatever range I'm playing, and generally speaking, most of my positions are taken with Fibonacci's, right? I'm looking for those 786, 886. I'm looking for that target around the 214. Usually I end up closing half my position inside the range that I'm playing. And that's usually around that 214. Not always. Sometimes I nibble a little bit on the way if things are taking a, just any sort of a warning, right? I might downsize a little early. But I always like to leave about half of my position run, just in case that trade continues to go. And then at that point, it's more so, okay, if indicators start changing directions of which way the signals are trending, then I'll consider taking another quarter of my position or 10% off the remainder position. Or if, let's say, like right now, I'm in a short, a lower high structure point got broken. There's a chance there's a reversal. So, okay, I'll take 10 or 20% off the remainder of my position, right? So I'm more so at that point. Also looking at longer time frames, any key levels, anything like that, I'll have partial take profits. But yeah, I'm very rarely close an entire position. I like to let them run if I can and just kind of nibble at the profits along the way. Because running positions can go a long way, right? I don't bank on hitting those home run trades, but when they happen, I want to catch them, even if it's just with a quarter of a position or 20% of a position or half a position, whatever, right? Like I said, right now, I only have 40% of my position running at this point. I close 60% of it in this range. This range being the one that I had mapped out at the start. I don't know if that's helpful or not, but yeah, basically after I play the range, from there I'm looking for things to react to more than predict, honestly. I'm looking at the trend just continuing, but if the signals or the horizontal structure levels change, then I'm going to just consider nibbling some more profits. So that's kind of my strategy. But again, I mean, we could have the exact same indicators, trend lines, absolutely everything the exact same, and we would trade the markets completely different. But that's just what I find works for me. It helps me keep a level head. Just because basically the way I look at it, maybe this will help too. The way I look at it, if I look at my position and I think, oh, that's great profit, but I think I can get more. If things reverse and I end up getting stopped out at whatever my stop loss is on the rest of my position, will I be upset that I never took more profits? If the answer is yes, I should probably pay myself a little bit more. If it's a small amount and I don't care whatever the reason is, I'm just open to the risk and I'm good to leave it, then great. But yeah, basically just that instinct of how will I feel if this goes against me right now? Will I be upset? Yes, you should never be upset in trading, right? If you lose a trade and you're upset, you probably put too much money on the line. You should be able to approach the markets with a very level head. And that's one of those things, just kind of nibbling at the profits along the way. I find that it helps my mental well-being a lot, because if I'm always trying to go all or nothing, like, oh, I think this is an exact bottom, I'm going to close my entire position. Well, if it keeps moving that direction, I'm going to start getting FOMO. I'm going to enter into shitty positions that I maybe shouldn't, and all those sort of bad habits. Whereas if I leave some of it running, then I can just approach it with a level head. And you know what? More profit at this point is just a bonus. If it doesn't happen, then whatever, I already paid myself. Yeah, exactly. PTSD from watching winning trades turn into losses or break even. And that's what I was talking about before, right? Is the hardest thing in trading is to take profits. And a lot of times when people decide, no, I am going to take profits, so many people close the entire position. And I just don't agree with that, because running positions can really make or break you. Running positions are great, but if you're always swinging for home runs, that's probably not going to work out either, right? Generally speaking, the markets just trade sideways and range trade a lot more than they're breaking out or trending, right? We see a lot more sideways price action. And that's why I like to play the range first and then hope for that breakout with part of my position. That way I'm good either way. I'm making sure I'm paying myself if I'm wrong. And if I'm right, I still catch it with, even if it's a smaller position than I wanted, hey, at least I was doing things sensibly and keeping risk management on mind, right? Yeah, absolutely. Um, Anyways, legends, I think that's about all I wanted to go over today. Hopefully you guys found this stream useful. If so, please do me a favor, go back. I will post this on my YouTube channel. If you go back, hit the like, leave a comment, anything for the algos, that would be muchly appreciated. But yeah, other than that, I think that's about all I had to go over. Anybody watching this on my YouTube channel later, because I am going to upload this right away, if you are interested in my favorite indicators on TradingView, there is a link down below. And I'm doing most of my trading on Blofin these days, a no KYC exchange. And yeah, if you need a new non-KYC exchange or just a backup in general, I do actually have an interesting promotion going on right now, which I have shared on Twitter. If that's something that interests you, some nice prizes there. Links down below for that as well. Yeah, with that, I'm out. Stay safe, my friends. Peace.